Welcome to this week's episode of Accredited Investor Markets Radio. Each week, we speak with you about investing in alternative assets. Unbiased and beholden to no one, Accredited Investor Markets Radio does not accept advertising from any investment firm or financial advisor. Accredited Investor Markets Radio is the spoken word sister of AccreditedInvestorMarkets.com, the internet's most comprehensive and unbiased educational resource about crowdfunding, angel investing, venture capital, private equity, private shares, and other investment classes beyond publicly traded stocks and bonds.
Hello everyone and welcome to Accredited Investor Markets Radio. I'm Christopher Cahill. Later I will be speaking with Marty Coyne, Chief Technology Officer of ConnectedInvestors. ConnectedInvestors is a very large online marketplace for real property buyers and sellers. And that's not just buyers and sellers of individual pieces of real property, but pieces of deals as well. Should be an interesting conversation. But first, let's talk about classic cars. Why? Well, because I read just today a piece in Investment News dated July 2, 2015 by Deborah Nason entitled "Classic Car Prices Have Surged, but Investing in Them is Another Story." So we get to learn a little bit about investing in classic cars, but all of this drives my thoughts back to Michigan, where I practiced law for a 2-year period recently in Birmingham, Michigan, which lies athwart Woodward. Woodward is otherwise known as M1, Michigan State Route 1, a great old street that extends in a diagonal northwest of downtown Detroit. It starts at Hart Plaza in downtown Detroit, which was the birthplace of Ford Motor Company. Woodward contains the very first mile of concrete paved roadway in the United States. The first car was driven on it in 1896. 119 years later, this August 15th coming up, the Woodward Dream Cruise will take place again, and having lived through 2 of those, I can tell you it's an enormous spectacle. Hundreds and hundreds of classic cars appear on the streets of Birmingham in the weeks leading up to the Dream Cruise, and then they take over Woodward for the balance of the Dream Cruise, one bright, warm, sunny Saturday in August. Living in Michigan, I grew to regard large garages as probably holding a classic car lurking within. I knew a friend who lived in Royal Oak. One guy living alone, 3 cars, one of them a classic car parked in the garage. That's Detroit. That's Michigan. Of course, I'm digressing like mad. Let's get to the article. I'm going to go through 6 points from the article that have to do with investing in classic cars. First, the value of rare classic cars has risen more than 500% over the past 10 years, according to the Historic Automobile Group's HAGI Top Index. Well, that's pretty good, you'd have to say. Well, why is that? Basic economics. There are more buyers than sellers, and classic cars are a finite group, sort of like stamps are a finite group, at least classic stamps. Demand has also grown, if you think about it, due to other factors you could identify. The growth of the internet. We've always had collectors magazines. The internet is a giant collectors magazine when it comes to classic cars. However, there are caution signals. Jim Glickenhaus is a renowned collector of classic cars. His historic classic car collection has been featured in Road and Track magazine, don't you know? He says investing in classic cars is a dangerous game. He sees the growth in prices as an example of hyperinflation. Steve Linden, a vintage vehicle appraiser, broker, and author, begs to differ. He sees no indications that the market will soften. And he points out that the vast majority of people buying classic cars that are over $100,000 in value now are investors, not collectors. A growing number are from overseas, and they're looking for a place to park their money. You might say, or you might surmise, that some from overseas, when they perceived that their currencies were weakening relative to the US dollar, thought this might be a good place to park your money and preserve its value. They're paying cash. Finally, Mr. Rupert Banner, an auctioneer of classic cars, recommends when it comes to what type of car should you focus on, Mr. Banner recommends those eligible for events. You see, there are classic car events. They tend to be a market force for the industry that lures people into the hobby. The main types of classic car events are road tours and circuits, and historic concours, which I think is pronounced concours, or high-end car shows accompanied by car auctions. And he recommends investing only in concours quality cars. These cars have been judged by a qualified judge and have earned a number of points. By the way, I was reading a quote about them being judged by a qualified judge. And as always, when you're dealing with these kinds of assets, somewhere in the article it is recommended that you become an expert or hire one. So I am definitely not an expert. I cannot fix cars. I don't know how to make them look better. But I've always been impressed by the rough, muscular poetry on display. The Dream Cruise, of course, this article kind of takes the poetry out of it, but it needn't. I would like to direct you to some articles on AIMkts.com about investing in tangible assets. First, Andrew Rosenbaum wrote an article called Elegant Investing, Sip Your Way to Riches, from September 2014 on AIMkts.com. It's about investing in wine, in part because you love wine, you're interested in it. AIMkts also features articles on stamps, on comic books, and a long piece with many links to other pieces entitled Investing in Tangible Assets, so it treats the topic more generally. So become an expert or get one. Well, about becoming an expert, maybe there's an objection one could make to that strategy. Perhaps investing in something that fascinates you injects a note of passion and unreason in your activity, which may degrade your investment decision-making. On the other hand, as an aficionado or aficionada, you do gain substantive knowledge that may offset that unreason. We probably should consider normal investing has hidden sources of error, and I'll point out one that's sitting there right in the middle of the room that's pointed out by Robert Shiller, a Nobelist in economics. Before I read the quote, think about what you hear when people are talking about investing. Think about the many different articles with many different viewpoints, all of them uttered confidently about the same area of investing. Robert Shiller says, quote, "You have to recognize that your own thoughts are not your own thoughts," end quote. Words of the wise. If you study the markets for years and years, perhaps you can have your own thoughts. But otherwise, aren't you carrying around prefabricated thoughts of others? Shouldn't you hold some humility with regard to what it is you think you know about the markets? Which brings to mind John Maynard Keynes, who famously said, I quote, "Practical men who believe themselves to be quite exempt from any intellectual influence are usually the slaves of some defunct economist." John Maynard Keynes is himself a defunct economist, and in recent years his own fiscal doctrines have been unknowingly adhered to by legions of so-called deep thinkers. But let's get to real estate and the interview. With me today is Marty Coyne, the Chief Technical Officer for ConnectedInvestors, that's all one word, and you can find them at www.connectedinvestors.com. ConnectedInvestors is the world's largest real estate investing community and marketplace. ConnectedInvestors provides lead generation for online lenders and online marketplaces. The company's promise is to simplify the exchange of real estate for investors through a massive online platform. The transformation technology can bring has been the premise of Marty Coyne's career at GTE and at Motorola. At the latter firm, his teams drove more than $1 billion in new business revenue to his company and its partners. Upon such successes, Coyne launched a global consulting practice from which he helped businesses of all sizes develop and deliver disruptive solutions to the market. The Connected Investors community numbers over 250,000 members. Through Connected Investors Marketplace, one can buy pieces of deals through syndicating crowdfunding platforms deals on their site. One can buy single deals, typically commercial and residential investment properties, and one can buy packages of deals, bulk property or note purchases. All the while, Connected Investors' network of lenders is available to provide funding options. Marty, glad you're here.
Thank you very much.
So you are a Chief Technology Officer. Maybe you could look into the past and tell us what was the first online equity investment platform for real estate that you reviewed with a professional eye?
Well, you don't really have to go that far back. So I would remember pretty clearly. It was Realty Mogul. Back then, and we're just talking a year or two ago, there were just a handful, and those handful kind of set out and kind of showed everybody else the way to go. And I wouldn't say necessarily that they proved out the model, but they validated that there was a model to be had. And back then, there were just a handful to look at.
Okay, that was back then, all the way back a year and a half to 2 years ago. How would you describe it as just a handful now?
Interestingly, I think I read the other day that there are 85 platforms today. And I tell you, I've been to many of them, and they're in various states of readiness. And what I mean by that is there are some that are up, operational, open for business, and doing their thing and doing it quite well. But the vast majority, I would say, are in somewhere along the way, trying to figure it out. Maybe they have a website, but they don't have any properties on it. Maybe they're still trying to figure out how to play in the game. But so while I say there might be 85 today, I think the functional ones are far less than that. But at the same time, I expect that this time next year, we'll double that number again.
Now, of those 85, how would you distinguish your firm, your platform, from those platforms?
Well, we are not a crowdfunding platform, okay? And I want that to be really clear. What we are is a marketplace backed by a massive community of real estate investors. And so what we've done, the strategy we've taken is to essentially aggregate those crowdfunding platforms and give investors a view of what those options with these different platforms are. Each of these different platforms have different business models, they have different strategies, and they have different options available to the investor. Some of them can take as little as $100, for example, while others insist that you have maybe a $20,000 investment. So they're all over the map and provide a vast number of opportunities and options for the individual investor to figure out which way they can go and which meets their requirements. And so what we wanted to do is provide a singular platform where people could come and get a view of all those instead of having to figure out how to sign into 85 different platforms.
Well, you're speaking my language when you're talking about relieving the user from having to sign into multiple platforms and so on. But when you're looking at if I may call them substantive platforms, I'll ask you in a cheeky way, is it the rider or the horse he rode in on? Putting it differently, what's more important at this point, the deal someone sees or the platform the deal is on?
It's actually a great question, and I don't know how you separate it, to be honest. It's kind of like getting a guarantee from someone. The guarantee is important, but who gave you the guarantee is equally as important. And so that's kind of the way I look at this. The deal will have some very specific things related to it, and I would urge anybody looking at the deal itself, they have to read this thing and really understand it. And when they think they understand it, they need to read it again. And when that's done, then they should probably engage an attorney or someone to help them really understand what this opportunity really looks like. that's one of the things that's really holding crowdfunding for real estate back, I think, is there's some fear out there about what's going to happen when so-and-so loses their money because they didn't read the deal. Well, read the deal. Don't be that guy. So pay attention to the deal itself, but then ultimately it's really going to come down to who is offering the deal.
And what kinds of technical abilities should a platform have that you perhaps noticed some platforms don't really have or might not have?
You know, the technical abilities, I would say, and you know, I'm a CTO, so I should be trumpeting the importance of the technology. Yet I'm going to go the other direction with you. I think that the technology, frankly, is the simpler piece of this. There are all kinds of issues around legalities and compliance and regulations, and just people who understand what they're doing, those are the things that I think are more important than the technology. The technology itself, they're all pretty much the same. They present you with a secure way to log in and validate who you are, and then they show you opportunities. You certainly want to make sure that it's somebody who has a secure website and make sure that you go through some kind of a security validation. But the inner workings and the technology itself, I would tell you the differences are not huge, to be honest.
Oh, okay. That's actually somewhat reassuring. Do you think, I mean, you and I met at a conference of real estate equity crowdfunding types, including technical officers, but others as well. Would you say that an industry standard is emerging on the technical aspects of equity investment crowdfunding platforms?
I think from a technical point of view, I think that, there are some standards coming, and one of the reasons is there's a race to the market. You know, where there is money flowing into something, and there are certainly huge amounts of money flowing into crowdfunding, well, that's going to attract a lot of people trying to get a piece of it somehow. So there are a number of different people coming in and trying to be the platform. And so in order to do that, they have a buy or build choice, and some of these people have decided to build their own type of technology, and those people are going to take longer to get there, but there's some value to that for them. Others are white labeling other people's other platforms. They're just white labeling them and putting their name on it. So because of that, I think we're going to really narrow the field down into a handful of various technology platforms, but that's the way I think this is going to get standardized the quickest. Okay,
so there are platform developers who put out their platforms for white labeling purposes?
Certainly, yes. So some of the platforms that you'll see out there will be, the old Intel Inside kind of a thing, where there will be different PC types. It will be the same kind of thing in the crowdfunding world, where there will be one technology in the back office, but they will be marketed and labeled, and even the opportunities and the business model can be different on the front side facing the customer.
If we may reduce the focus, so to speak, from the industry to the CTO, this CTO in particular, you had a life before platforms. We're only talking about a history of a couple of years, but your life before that, what was it, and how did you get from there to here, and why?
Well, as you mentioned in the intro, I've always been around technology, and specifically around disruptive technology and how it can impact businesses. And I guess that's kind of my gift, is to be able to speak in very technical language, to speak to the technical resources, but more importantly, to translate that into the business folks. I used to deal with folks like the CFO of Ford Motor Company used to say how IT was just a black hole to him. He just threw money in it and didn't know where it went. And so taking that type of approach, I've kind of been able to connect the business to the technology. So did that for a number of years, as you mentioned in the introduction, with Motorola, where we built a team that went around and we worked with the largest companies in the country. Everybody from CVS and 7-Eleven and Ford and General Motors, and it's a who's who of the big companies in America. And one of the things that I wanted to do after that was kind of leverage that into creating my own business, which I did as a global consulting firm. And as time moved and the internet changed everything, including what we're talking about today with crowdfunding, it also changed technology in a big way. It used to be that people would call 1-800-IBM or 1-800-AT&T and the world's problems would be solved. But now, the leaders in innovation are small companies. The companies who are delivering purpose-built, best-in-class technology are, for the most part, smaller companies, and the bigger companies are literally too big to be as nimble as they need to compete. And so as I've moved into my consulting practice, I've identified projects along the way or companies along the way that I thought had something really special to offer the marketplace. And when I came across ConnectedInvestors, I thought that was exactly the type of opportunity that really ConnectedInvestors had a great future in front of them. They were early entrants into the social media world, and then you take that with all the influx coming in of real estate from Wall Street, and it was really a great magnet for this collection of a community of investors and funds and properties, and throw in Wall Street, and then that pulls into things that I care a great deal about, like data analytics and some of the things that I think are really game changers in the technology space.
I guess it's inconceivable in this day that a CFO would say anything like, IT is a black hole I do not understand.
It's inconceivable, and it happens every day. It's one of those things that I still hear on a daily basis, and even responded to something earlier today about the CIO reporting into the CFO and not really having a seat at the big boy table. And I think that's just an indication that if a company doesn't really value the real-time information that's available today, that just is an indicator to me that that company just doesn't get it.
Well, now you are at Connected Investor. What are some of the chief puzzles that you can translate to the rest of us that you face as CTO?
Well, one of the things that I think is, like we talked about a minute ago with crowdfunding portals, it's the buy versus build type of mentality. Things are moving so fast today that if you decide that, hey, I'm just going to go build this, I'm going to throw $1 million at this development project and go hide in a closet for the next 8 months to get something developed, I think that's the wrong answer for the most part. You'd have to be pretty special to be able to pull something like that off, as opposed to taking some frameworks and some applications that are available in the marketplace and integrating them into a fabric that really brings something to market faster. And so that's one of the big challenges that we've tackled at ConnectedInvestors, and probably the other one that jumps out at me is around the idea of sharing information. Many people out there in the information business, like we're in, they think that they need to take information and kind of hide it. Don't look at my test answers on my test. And we take the opposite view. We think that taking information and making it available is the way that we're going to empower investors, and we think that's in line with the other major technology trends that we're seeing today, where people are having more information access on their iPhones today than they had before when they went to a data center. And so we want to propagate that as well and put as much empowering information as out there in the hands of the individual investor. And so everything we do is committed to that.
The ethic of sharing information sounds like it has echoes in the programming world as well, with open source and so on. But in your world at Connected Investor, with your business model, are you evading cybersecurity concerns, or is that something you find yourself having to concern yourself with?
Oh, absolutely, we're concerned with it. We go through great lengths to protect information, and we also are very careful about the information that we take in and store. We don't want to be a target for the type of cyber attacks that are prevalent out there today. But at the same time, we are very much aware of and are taking every action necessary to make sure that we are protected and that we do protect our members' data.
Your members are not simply people who are seeking to buy. They include other parties as well.
Our members are really a a cross-section across the real estate investor space. We have the mom-and-pop investor who has a single property that they want to rent out, and or they want to take on a fix-and-flip property because they watched it on TV and think that's something that they'd like to do. So we have folks like that. We also then have a whole bunch of members that come from the financial community, whether they are lenders, private lenders, hard money lenders, and so forth. We have those people as well, and then the hedge funds. So it's really a real mix across the board of the everyday investor, like the guy that you live next door to the big Wall Street firms that are coming in as well.
The members, as you put them, if you count them up, that gets to the 250,000 figure?
Correct.
And this is exclusively domestic real estate investing. We've had some other guests who have not talked about platforms necessarily, but have talked about pros and cons of investing in other markets outside the U.S. Does Connected Investor present information from the U.S. perspective opportunities?
Well, yes and no. And first of all, we have a number of members who are not Americans, so that we do have investors from Europe and Asia and Africa and everywhere. In fact, we're talking about crowdfunding. We're talking about having an African real estate crowdfunding platform being visible on our site. But so we have members from all over the world. Today, we are not posting properties outside of the United States, but that is certainly something on our roadmap and something that will be coming soon.
And now that's a geographical diversification of properties. So let me ask you then about within the United States. Do you have a section devoted to, let's call them troubled properties or turnaround opportunities?
Again, it's really a cross-section of everything. Most of the properties on our site are off-market. And so some of them are RIOs, some of them are bank-owned. They're individual investors. They are really a cross-section across the board. And like you said a little while ago, some of them are going to show up as crowdfunding opportunities, and some of them are going to be part of bulk properties where somebody is trying to sell 100 properties in South Florida, those types of things. But some of them are large commercial projects, hotels and whatnot, and then others are single-family homes that are in need of a little love in Chicago.
Well, it sounds like if I were somebody who held a bunch of notes on properties and I wanted to unload them, then I might want to go to Connected Investor and see what there is to see. Meanwhile, somebody's buying those notes. Is it possible that there's a third party, say an enterprising attorney, who would like to get the workout business from that buyer? I suppose there's no way to keep that from happening, is there?
We encourage all of that to happen.
Yes.
What we do is people who want to upload their properties, they upload their properties into our marketplace, and there's no charge to do that. One of the reasons there's no charge to do that is because that attracts investors who are looking for properties, which attracts lenders who are trying to provide funding for those investors to buy those properties. It's kind of the old, Dr. I lost his name, Dr. Doolittle, push me, pull you kind of mentality. So everything is kind of working in a cycle so that we put everything in. And so absolutely. And then we also would pay attention to the different roles of the team members for an investor. There are everyone from brokers to agents to attorneys, closing folks, the whole deal. And so what we want to do is include those folks as well, because it provides a whole ecosystem for everyone involved in the real estate business.
Well, I mean, it's sounding, maybe ecosystem is the correct metaphor, but I was just writing down the words agora and souk and marketplace with daylight streaming in and all kinds of people, maybe not babbling over one another the way you might picture one of these places, but rather able to get in touch with one another quite easily about something that each can see in common.
I kind of liken it sometimes to a big cauldron with some stew in it, and figure if you put a bunch of investors in here and you mix in some properties and then you throw in some money, deals are going to get done. And that's exactly what we're trying to do, is keep throwing things in this big pot. and we think good things will happen out of that.
Are you going to play Let the Sun Shine over the digital marketplace as people are investing and offering things?
I'll offer that up. I know that you're an attorney, not a marketing guy, but I'll still consider.
Well, my instincts are very sound. Now, let's close then with a little joke. Let's say that I imagine I'm an accredited investor, but also a physician. Now imagine I'm Dr. McCoy from the earliest and greatest Star Trek, saying with exasperation, I'm a Dr. Jim or Marty, not a CTO. How should an ordinary successful doctor, who's now an accredited investor, go about evaluating a platform or its people? This is a repeat of what you said earlier, but I think it's worth underscoring.
I think it's really a matter of a few different things, and really where I would focus on is who's behind the offer. And when I look at these people, the first thing that I would have to look at is, are they credible? Do they really have the background to make this type of offer on their platform? This is a complicated business. This is one of those businesses that you really have to understand the legalities, the compliance, and you have to understand real estate. This is a very specific marketplace that we're talking about. And yet when there's so much money flowing into it, there's all kinds of people from all kinds of backgrounds that are not really qualified to be here. Well, they've shown up. And so you have to be a little bit alert about the folks that you're dealing with. Now, there are some great people here in these crowdfunding platforms. But like I said, anywhere you show up where there's lots of money, there's going to be all kinds of people that show up. The other thing I would say is that you need to make sure that this is really the focus of what they do. This real estate crowdfunding space is moving so fast that if they're treating this like a hobby, they're going to miss it. This has to be something that they do on a real-time basis. You even know as an attorney, the regulations surrounding this have been a moving target. Yes. And if you have an attorney, for example, that is focused on other things, it's hard for them to be expert in the crowdfunding regulations. It's the same thing across the board for these platforms. You need to make sure that the people who are involved in this really are focused on it and they know what they're doing. I guess to further that, at the end of the day, real estate crowdfunding is also about marketing. And so they need to know how they're doing marketing. And it needs to be something that they're pretty good at, because if you can't attract eyeballs to deals, you're not going to get your deals funded. You're not going to find out what you need. You're not going to have your deals funded, and you're not going to be able to close those deals. And that's really why what we think we bring to the table is we're bringing eyeballs to these deals and to the different opportunities available. And then when you're done with all that stuff, again, like I said at the beginning, look at the deal itself. Read it, reread it, understand it. Don't be that guy I described earlier that gets taken because they didn't pay attention.
Well, all right, and I can say that having met you at the Real Cap conference in Chicago, sponsored by Soho Loft, there was a large room filled with a fair amount of people who were focused and taking it very seriously, and clearly this was the only meal on their plate, and it was something to see. I thank you, Marty Coyne, Chief Technical Officer of ConnectedInvestors.
Thank you. I enjoyed it.
This has been Accredited Investor Markets Radio. I am Christopher Cahill. If you have any questions, please email me at ccahill@financialpoise.com. Please look at www.AIMkts.com for interesting content related to what we discussed today. Accredited Investor Markets Radio is produced by Stephanie Strait. Let's do this again sometime.
Thank you for joining us. If you enjoyed this episode, you can subscribe through iTunes or Stitcher, or you can download our app from Libsyn. You can also listen right on our website, www.aimkts.com. Each week, Accredited Investor Markets Radio brings you news and education about investing with a focus on alternative assets. To see a short written summary of this episode, go to www.aimkts.com. Accredited Investor Markets Radio is a production of Financial Poise Radio Productions, LLC.